Happy morning to everybody. It's the 4th of July. I'm here, you're here, and I'm glad to be with you. Welcome to our big, happy webinar. I want to get right to the point. I want to talk about pivot points and the importance of pivot points. Last night in live trading webinar number 1 with our group of students, 2,900 students, we traded the Australian dollar, US dollar, and we targeted this daily pivot. And the reason we targeted that daily pivot for our sell trade was because it was missed. This is a critically important concept that often gets missed, and I want to talk about it today. I'm so happy to see you here. Thanks for joining me. If you're probably living outside somewhere around the rest of the world and not in the United States of America. If you live in the United States of America, there's no reason why you should be at this webinar today because it's a holiday. I want to walk through a really important concept that we don't talk about enough, and it's the importance of missed pivots. And on the chart in front of you right now, we see the S&P 500. This is a weekly chart. And on this weekly chart, at the very top of the chart, you see a red line up there at the very top. This is Knoxville Divergence. That Knoxville Divergence line is an early warning sign that price is going to reverse and begin to fall. It's not a guarantee, but at least is a suggestion that it's time to take a rest here. Like, hello, thank you for that monster trend. We're now ready to do a little bit of a drop. But where's it going to go? Where will it go once it begins to drop? And how can we have confidence in the thought that it might fall? Well, missed pivots are the key to unlocking the answers to those questions. And that's what I want to do here. On the screen right now on tradingview.com is the weekly chart and a series of lines that are positioned below the financial instrument. These are missed pivots. My indicator will color missed pivots that are daily blue, monthly red, and weekly green. Every single one of these lines represents a weekly, daily, or monthly pivot point that was not hit by price on the day, the week, or the month that it was created. For example, this is the weekly pivot. This line that down here, this green line down here at 1973 is a weekly pivot from the week of March 14th or 7th or whatever, 2016. Price went up so far, so fast that week that it never hit the weekly pivot, and that weekly pivot was just left in the dust. And then a series of daily, weekly, monthly, daily, weekly, you get the idea. Pivots were missed as price traveled upward in this Trump bump or Trump rally. Now we're left with an immense amount of unhit targets, magnets for price that want to be hit by price. This is critically important, and it suggests that there not only are targets where the market wants to go, but there is a buildup of there's a weight. There's something weighing down on this financial instrument now, and that weight will eventually catch up with it. You can only move up so far for so long, and then eventually the weight catches up. When you see a financial instrument like this that has an immense number of missed pivots below it on the weekly chart in particular, you know that that financial instrument is going to have a run in the opposite direction, and it's going to be extreme, and it's going to be absolutely spectacular. And there are so many examples of this, and I'm going to show you one of these examples right now, and then we're going to come back to the S&P 500. Long time ago, in a galaxy far, far, far away, the dollar Japanese yen dropped like a rock. I mean, it just dropped like crazy. And I'm going to put pivot points on the chart. And I'm going to color a yearly pivot red. And as the US dollar Japanese was dropping, almost nobody thought back in 2008 and 2009, almost nobody ever imagined that this could ever recover, that the financial crisis was so far gone, and everything, the whole financial system had just been rocked, that the dollar yen would never recover. And it dropped as far as 76. I remember at the time that we were all just perplexed at how far it could go for how long. And it missed its yearly pivot from 2008. And it traveled not 100, but not even 1,000, not even 2,000, but 2,500, 600, 700 pips lower than its yearly pivot. And then something extraordinary happened beginning in 2012. The dollar yen recovered. It went all the way back to its yearly pivot from 2008. And along the way, my friends, it hit monthly, daily, weekly. There were so many lines on this chart, and it was just blowing through all of those lines. So let's go back to where we were just a bit ago. Here we are on the weekly chart of the S&P E-minis. Yeah, that's the one I like to look at. That's fine. And here we are. There is the same situation happening right now. We have a missed yearly pivot, well, unhit for this year. And we have clusters, I love that word. We have clusters of pivots right here at 2280. This suggests to me that we are going to hit these levels at some time in the near future. Missed pivots matter, and it's important to get those missed pivots on your charts. Now, you can get these missed pivots inside of the indicator package on tradingview.com. I'll send a link out to that a little bit later on today. But let's take a look at the long-term charts on a variety of financial instruments. Oh, look at Bitcoin. Bitcoin has been a monster, a just absolute monster. But I'm going to make a bold prediction here. Before Bitcoin can travel to $10,000, it's going to fall to $1,240, down here to a yearly pivot for 2017. And when it does that, I'm going to get my greedy little paws on just about every bit of Bitcoin that I could possibly ever imagine. I wonder if Ethereum is missing pivots. Oh, well, what a shock. Ethereum, the other digital currency that's really big these days, is also missing tons of pivots. Just extraordinary what's going on there. Let's take a look at gold. A lot of people love gold, but gold really doesn't have a huge number of missed pivots. It doesn't have a lot of them. If you look at the chart right here, we're not really looking at an extraordinary amount of missed pivot levels. In fact, gold could move in either direction right now. There doesn't seem to be any suggestion that it's going to travel in one direction or the other. I would favor maybe the short side over the long side. This is the Australia 200. Missed pivots below. Not a lot of missed pivots above. Every trend starts with missed pivots above and lots of missed pivots below. Every bearish trend will begin with a couple of missed pivots above price and then a huge number of missed pivots below price. I mean, I'm not thrilled about that, but, you know, it's interesting. Here's the US dollar, Canadian dollar. There's too many missed pivots above and below price. But let me give you a little word of caution. A while back, that's too far down. A while back, we started missing a daily and a weekly pivot after a long run upward. And then we started to drop. And there were a lot of missed daily and weekly pivots below price. And the dollar, Canadian dollar, started to drop. There are still 2 yearly pivots below where we are right now. I would say it is my feeling that we're going to see oil rise and the Canadian dollar rise and the dollar fall, and we are going to get to at least 1.2137. These are super long-term. Dollar Mexican peso. We actually talked about this a long time ago, months ago. And we talked about it falling to the yearly pivot. And the dollar Mexican peso has fallen even farther. And this trend could even continue longer down to 16.62. Dollar Japanese yen, this is trapped in the middle. There aren't a lot of targets in either direction. Here's the Australian dollar, Canadian dollar. Not a lot going on here. I wouldn't think that this is a large enough number of pivots in either direction. The Australian dollar, Japanese yen seems to suggest, with a cluster of pivots up at 95, seems to suggest that we've gone up 1, down 2 waves, and we're just at the beginning of a third extraordinarily bigger wave of movement upward. That's not out of the question. If the Canadian dollar is going to rise, it makes sense that the Australian dollar could rise. And check it out. We have the 2016 yearly pivot at 89. I absolutely think that level will be hit. I'll say it right here. Of everything that I've said today, I think it's likely we're going to see 89 on the Australian dollar, Japanese yen. Alex says, do you prefer using missed pivots as eventual profit targets or trading away from them as indicators of the trend? I like using them as targets, but Alex, what I like to do is start to use them as targets, even now on the Australian dollar, Japanese yen, once I know that there is this lone missed daily pivot down here. That is the beginning of every single big trend. Great question. Really happy to hear that question. Let's move on to the Canadian dollar. Nothing going on here. Now, a lot of my friends even recently have been looking at this currency pair and saying, oh, the Canadian dollar is really ready for a big blah, blah, blah. There's not a lot of missed levels here. There is a missed yearly pivot at 87.30. Fine. It can get to that. I sure would like to see more missed pivots above, though. Canadian dollar, Japanese yen. Missed yearly pivot at 92. Love this trade. Everything that I'm looking at right now suggests that oil is going to rise. Every single thing that I'm looking at, every technical indicator, wave 1 up, wave 2 down, wave 3 up to 100. Don't think it can't happen. These are some bold, big predictions. The Swiss franc Japanese yen is traditionally peanut butter versus peanut butter, meaning something that is similar against something that is similar. Both of these currencies are safe haven currencies that rise when there is financial stress in the system. This doesn't look like it's going anywhere in particular. It has lots of missed pivots in both directions. The Euro-Australian dollar doesn't really look like it's going anywhere. Be a nice time to turn, for instance, the Finch robot on and just let it trade in either direction. Well, I mean, compared to this is a really interesting one. The Euro-Swiss franc. Remember back when the Swiss National Bank reset the peg? Well, it missed the 2015 yearly pivot. Don't make any mistake. It will eventually get back to that level. It might take 10 years, but it's going to get back to that level. Let's look at the British pound, because that's been in the news so much. I don't want to look at the pound Australian. I just want to look at the plain old pound dollar. Look at this. After all this Brexit hoo-ha, whatever you want to call it, down 1, then up 1, then up 2, down 3, up 4, down 5. 1, 2, 3. I think we're ready for a movement down in the British pound. We haven't even hit this year's yearly pivot. We're getting very close. And then maybe a big substantial move up. That would take the world, that would shock the world. No question that would shock the world. Now, I don't know anybody that thinks the British pound is going to rise. But I have heard from British companies like Raspberry Pi that make little tiny computers that are really happy about the pound falling because it has helped their companies. So missed pivots are a way not just to judge trend like we've looked at in the past, but they are extraordinary targets, and they allow you to make bold cocktail party predictions about where price is going. I'm excited to see you again tomorrow. Thanks so much for joining me in these daily webinars. Don't forget, every webinar is available after the fact, later on, a few moments later, on youtube.com at youtube.com/RobBooker. And don't forget to subscribe to that YouTube channel. That brings my heart joy. Or facebook.com/RobBookerTrader. And those are the places where you can watch the recordings of these morning webinars, and you can get my indicator package at a link that I'll put at the bottom of the YouTube video. You're all the best. I love you. I hope you have a great 4th of July if you're in the United States. And if you're anywhere else in the world, please enjoy your day. I love you all. I'll see you all tomorrow. Bye for now.